The next panel is Coping with a Medium-Term Surplus in LNG. And for this panel, I'd like to invite the Washington Bureau Chief of Energy Intelligence, Mark Davidson, up to moderate with his panelists.
Good afternoon, everybody. It's never enviable to have the final panel of on the final day of the conference, but we like to think of it as saving the best for last. Thanks for those of you who are here, because I think we've got a good, lively discussion about to take place. So much of the discussion, of course, at this conference has been about the oil markets, and I think the oil market might be seen in terms of sort of what a difference a year makes, whereas the global LNG market might more aptly be characterized as what a difference a decade makes. And what I mean by that is, you might recall, you'll recall that, back in the mid to late 2000s, the U.S. was planning for a gas supply shortfall, building or proposing all these LNG import terminals to bring gas in from other countries. And then came the shale gas revolution, and suddenly the U.S. was awash in gas, and many of those import terminals turned into export projects, and those were going to send gas to hungry Asian and European markets where prices were much more robust. Well, it's 2016, U.S. exports are finally underway, but now that LNG is going into a market that, frankly, doesn't need it. It is oversupplied, regional price differentials have largely collapsed, and the economics no longer work the way many suppliers envisioned it. So how does this all play out? I'm pleased to be joined by a panel of experts who will talk to us about that. To my immediate right is Frédéric, Barnaud, Chief Commercial Officer for Global LNG with Gazprom Marketing and Trading. David Ledesma, an independent energy and strategy consultant and a senior fellow at the Oxford Institute for Energy Studies. And David Hewitt, Managing Director of Equity Research with Credit Suisse. So I thought I would start with sort of a 30,000-foot level question, and then we can sort of drill down from there. Given this oversupply, we hear a lot of talk about a medium-term glut. What does that mean in terms of the depth of the oversupply and the length of it, and if and when do you see a rebalancing taking place? We can start with you, David.
Great. Thank you very much for the invitation to be here. I think there are three primary time horizons to think about, and the differentiator between oil, where we're beginning to see the light at the end of the tunnel. There will be light at the end of the tunnel for LNG. It's just a lot further away and a little bit of a pinprick at the moment. I think in 17 and 18, the near term, the question is how successfully the projects that have been under construction for the last 3 or 4 years actually manage to ramp up. And it's actually a very focused concentration with one operator, which is Chevron, with 3 projects, which are Angola, Wheatstone, and Gorgon, the infamous Gorgon. You then move into a period of oversupply, the way we put our numbers together, between 18 and 22, 23. And then you see the light at the end of the tunnel, the requirement for as yet unsanctioned molecules going into 24. So it's a much longer period where we have a potential excess, which we'll have to deal with. We'll have to find a way to deal with that, and maybe as we go on, we'll talk about the opportunities to do that.
Yeah, I agree with you, David. But I think it's worth thinking about the established buyers in Asia, particularly thinking about Japan, Korea, and Taiwan. Some of these buyers have got some real challenges facing them. Not only, let's take Japan for example, not only they don't know what the nuclear is going to be, are there going to be 0 nuclear stations, are they going to be, going back to pre-Fukushima? I don't think that's likely, I think it's probably going to be somewhere in between. So that's one uncertainty. They've got huge liberalization taking place in their market, so they don't actually know who their competitors are going to be in the future, and that's very, very new. And of course, also, economic growth has not been what's predicted. So there's fundamental market changes taking place in this, and that is very difficult, therefore, to determine what their demand is going to be in these markets, and therefore what the surplus is going to be that we're going to be talking about Europe taking in the future. So therefore, I would agree with the dates, but I think it's there's a lot of uncertainty.
Okay.
I suppose a lot of the answer is in your own comment. The market doesn't need US LNG today. So, but it takes us to the supply and demand balance. And so there are factors that can influence the supply side. How will the US behave being at a, I guess, negative netback to all the markets they can reach today? How the sort of new, smaller scale liquefaction will develop, and how the bigger players will possibly curtail demand or go into severe, maintenance, some supply management. One problem with LNG is LNG doesn't exist, it's gas plus shipping. So you cannot store, apart from a few cargoes on the water, but not too long for not too much, you cannot store LNG. So the supply demand has to balance. And something has to give away, so either it will be the supply side, either it will be the demand side. I don't think new demand is strong enough to catch up with potential supply coming in the market in the next 2-3 years. The small, Ghana or Côte d'Ivoire, or in Asia, Bangladesh and those countries. That's not enough, not quickly enough. That will be the strong demand pool for post-2020. So something has to give it. Will it be price? Will it be supply side? I'm not sure yet.
And when you talk about new demand sources, there are potential new markets, countries, and then there are potential new demand sectors like the maritime sector, which seems to be gaining some traction. If you David 1, I'll call you. Either one.
Right hand, David. Let's have 1 and 2.
Can you talk a little bit about that? I think there's been some developments lately, particularly in the maritime aspect. But is that a big enough demand, source to actually change the fundamentals of the market?
Okay. Well, I think there are 2 things to look at. So look at transportation. Some work has gone on trying to get LNG into transportation. It's more suited to trucking than to personal vehicles. It's got a long road to travel. That was a joke because it's the final session. It won't be material in the near term. The IMO is meant to come out shortly and tell us that it's going to accelerate the sulfur requirement, the reduction in sulfur requirement from 25 to 20. That will have an effect in the bunker market. The bunker market is a material market globally. What fuel is chosen to replace fuel oil? If it's a mix with diesel, if it's pure diesel, if you scrub, or if you go to LNG, it's probably a 2030 story, but there will be some materiality there towards the back. For the onshore markets, for want of a better word, you have, if you listen to the bulls, you can make a case that there's 100 million tons of as yet unsatiated demand from countries like, as you said, Bangladesh, Vietnam, et cetera, et cetera. And what I've found in the last sort of 6 or 9 months is that some countries have become more real. Example, Pakistan. Some countries are actually moving in the opposite direction. They want to be in the LNG club, but they're not really putting the building blocks together to achieve that.
Yeah, it's interesting when you talk about maritime, because the numbers that are bandied about by a lot of commentators are the size of the market will be, 30 million tons, thereabouts, by 2030. 30 million tons is a lot, and 30 million tons is roughly the size of, South Korea's demand, which is the 2nd largest LNG buyer in the world. But there's a lot of little drop that's going to take place. I think the other thing is, and I think the IMO next week will announce to advance it from 2025 to 2020, so a great boost for the LNG business, is going to be enforcement. Because a lot of people are not going to want to do this. They're going to say, okay, let's get caught, I'm out at sea, no one's going to see me. And so I think there's a lot of enforcement that's going to be required for that. But certainly, we want clean fuels being used in our maritime business. And also LNG for road in long-term trucking is a huge solution. And I think that's something certainly being focused on by a lot of, certainly within Europe, some of the European companies.
But that's not necessarily a short-term, that's not something that's going to fundamentally change this medium-term.
Absolutely right, and it's not going to change the surface.
Okay.
Agreed.
I guess on the short mid-term, the power sector is the main driver, whether in the new markets, and there is hopefully an acceleration, but some limitation there. But that can quickly add 20 million tons, reasonably quickly. Not enough, quick enough to solve everything tomorrow, but it can bring sustainable, sizable demand for the future. Second one is power generation in Europe and other countries which have favored coal more, but for that you need price incentive to compete. We are not there yet fully, but there is a pool of demand from power generation, whether it's in India or in Europe, having been built, gas-fired, but not working today. So there's a few million tons there in India and elsewhere, and there's a big pool of potential demand in Europe there. But it's a fight versus coal, and in other places it's a fight versus oil, essentially. But we are taking on those fights, and I think we will win.
Okay. And in the meantime, let's talk a little bit about sort of the industry's struggles with financing, you know, in this medium term, or this, you know, sort of medium term glut. I mean, how is financing these LNG projects and getting FIDs and all that, you know, what are the challenges for the industry right now, and how is the industry, I mean, is it a matter of waiting out the oversupply, or are there mechanisms that you can use to try to get projects moved forward, you know, in a difficult credit environment?
So I think two things. The first thing to say is we don't need to finance anything quickly. So if it takes 5 years to build a new LNG facility, then, and we think that it's somewhere like 2023, 2024, you don't need a sanction this year or next year. You might be looking at it in 19, if you're very lucky, late 18. So no immediate decisions required. Who can finance it? It's either going to come from the banks. The banks will struggle to some degree to accept new pricing structures, but there will be some flexibility, I suspect. And I'm an equity research analyst. I'm not a financier. If you're not going to get project financing, then it's going to be self-financed off the balance sheet. That takes you back to the super majors, which will be a very important question as we come to the next cycle of which projects can and can't go forward. But the one thing that I would say back onto project financing is I suspect that where there can be some flexibility to changes in the pricing environment and the mechanism of pricing, I suspect that finance needs term. And if the average LNG project takes about 13 years to get to break even, you're not going to write 5-year LNG supply contracts that are project financed, in my opinion.
I agree with you. I think that the wish for shorter term contracts is going to cause substantial issues when it comes to financing. But as I said in my opening comments, I can understand why there's shorter term contracts when you've got all this uncertainty on the buyer side. They're looking for volume flexibility, they're looking for period of flexibility, and they're looking for destination flexibility. And so all of this means that the lenders are going to be concerned about it. And it was interesting when we look at US LNG. People see US LNG as being quite a novel way of doing it. Well, actually, the US LNG structures are pretty traditional. They're a tolling agreement with nice AAA credit-rated people at the back of it buying the capacity. So with that, you can go to the banks and you can borrow it. It's relatively low risk, and so therefore it's attracted bond finance. It's attracted other non-traditional sources of finance coming in away from the traditional project finance arena. But I think the newer projects are going to be smaller, simply because they are going to be the cheaper ones to develop, and also they're going to be more pocketing against the size of demand, the kind of the modules of demand. So it's going to be, and that might open it up for more balance sheet financing. But I think what you've said is a really good point. I'd hate a situation where only the large majors can actually be creating new capacity because of this. Because one of the beauties we've seen in the LNG business in the last 5 years are the new players coming in and challenging the way the business has been operating.
And I would add that the capacity of the large players to take volumes on their balance sheet has disappeared. Yeah. First, some have been really burned on the LNG side, but second, the balance sheets I don't think can support a lot of volumes, unsold volume, like it has been done in the past 7 more or less years. So that forces to either stop, redo the economics, rethink, take another few years, but also leave some room to the true innovators, which we have seen, and like Perenco and a few others, moving in and filling some space at some risk, but which they can somehow afford. And that will shake a little bit. So it's fine, like we did yesterday at the dinner to celebrate the big 7 sisters, but let's not forget those innovators that also fill the gaps here and there and make true innovations, either in market practice or in developments. technology.
Because you were talking, just running, you were talking about the smaller new markets right at the beginning, you know.
Right.
You know, these smaller new markets tend to be the markets which actually have the lower credit rating. They don't have the infrastructure in country. And so, you know, someone somewhere has got to bring a balance sheet to be able to underpin these agreements. Or is the bank going to take all the risk? I don't think they will take the risk. So that's why you've got to find a structure.
So there's a lot of potential market out there that is just not going to be tapped because there's lack of creditworthiness.
Or not the old way.
Not the old way.
Needs to be
Okay.
I mean, new ways of doing it.
New financing.
But you've real market. Egypt is a real market. It's a complicated one, but it's a real one.
Yeah.
And it's, you know, it's just popped up like that very quickly.
Yeah.
And Pakistan is another one, and Chile has been a great success in terms of accepting LNG as a major source of energy. So there is hope.
There is, absolutely.
I agree with hope.
And Gazprom will be there.
Very good. You got the promo in, well done.
Which one's the marketer on the panel?
And that was mostly dealing with sort of these new projects. But what about existing contracts? You know, I get the sense that there's a lot more flexibility now, given the market conditions, to renegotiate existing supply contracts, the terms of them, the prices. Can you guys talk a little bit about that and what impact that's having on the suppliers?
Well, there's an elephant in the room, and the elephant in the room is the Petronet Rasgas renegotiation at the back end of last year, 7.5 million ton contract. Very unusual pricing structure, highly unusual 60-month moving average floor, which left the Indian buyer paying $12 when spot was going to $6 and then below. Indian buyer underlifted by some 38%, which is a new term in LNG. I don't think we've ever had significant underlifting.
Outside of contract, wasn't it?
Outside of contract, exactly. It wasn't a previously agreed tactic. The price was reviewed and set to what you might call a normalized price. So there it is, huge precedent. It looks like a contract's being renegotiated because one party didn't like it and acted, I don't want to use the word aggressively, but with some vigor, shall we say. What happens to that wide body of existing contracts that we have going through North Asia, from Japan, Korea, China, and to the other markets? I think the answer, and I'll stop and let others go, but I think the answer will be that each counterparty will be different, that there will be some renegotiations around the basis of the contracts, and the outcomes will be quite different depending on what each buyer or buyer country is trying to achieve in this cycle. I'll stop there and maybe...
Okay, I'll build on that if I can. Some contracts do allow for price review. And if there's a price review, then they are normally arbitration in case of disagreement, and that means it's not termination in case of disagreement, so that's quite important. I think that sellers will look at this, they'll reluctantly want to renegotiate prices downwards, and also are they going to renegotiate downwards on an oil basis, or are they going to go to a hub basis in some way, and I'm sure we'll be talking about that in a minute. I think there is another elephant in the room, and the other elephant in the room is taking final investment decisions on new capacity for 2025. And that's what keeps me awake at night, because I don't think we're going to see that. And that's right. So I think there's going to be price renegotiations, but rather like the Petronet deal. And by the way, one thing on the Petronet you didn't mention, Petronet did very well in the early years of that contract.
Exactly.
They did very, very well indeed. And so it was only later on, they'd had their cake and they'd eaten it, that they asked for the reduction. But I think that you're going to find the counter thing on some of the contracts. And I look at China, who negotiated some high prices, quite rightly so, in a period when they were negotiating contracts when supply was less than demand. And I think they will come back and try to renegotiate, but there will be, the sellers will say, okay, we don't want to do this, but we want something else as a part of it.
Exactly.
That's the way the LNG business in Asia has always worked.
I think many people have fed on Gazprom price reviews in terms of paper publications. It's a bit unfair because I don't see enough on the other price reviews in the LNG world. One way or another, we are in a much bigger game there on the LNG side because it's a world game and many players. We talked about the Indians, but Chinese are the same and but different, and etc. And all over the world, it has been either formally or informally being renegotiated. So effectively, that needs to be solved before new FIDs can be decided. But it's an ongoing. I used to joke to some of the guys that people in the old days invented the LNG contracts just to keep a job for the next 20 years because of those price reviews. Now somehow I find it a little bit hitting me in the face. But I think that it shows that those formulas do not reflect the true price of energy. Yeah. So until we solve that, we will have discrepancies that are becoming so wide that they become unsustainable. Yeah. And so we need to solve the price of LNG, and it's very difficult because there is no true price discovery mechanism for LNG. But that will come with increasing liquidity. So again, but at this stage, everything is being sort of renegotiated everywhere as we go forward. And so it's becoming, buyers are looking at the spot or the 3-year forward rather than the longer term. So you need to be in a constant adaptation mood towards the market behaviors.
But sorry, I don't mean to interrupt. If you finished, maybe just expand a little bit further. Take a market, take Japan, known as the most reliable buyer. Contract integrity, very, very important. It's oversupplied, it's overcontracted as it goes towards the latter part of the decade. It wants to get lower prices and it wants destination restriction removed. This is the idea that if you buy something, you have to consume it, you can't resell it, which is illegal here in Europe, as we know. If you think that contract when crude goes back to 70 because the Saudi oil minister told you this morning it's going up, and my goodness, that's good news, then the contract price is going to something like 9 or 10. And if you think that spots are going to be in the 4 to 5 range because we're going to be excess in Asia to the end of the decade, that's a massive gap. You could form the simple conclusion that the Japanese just want the spot price and to go to 4. But I expect, exactly as you were both saying, there will be a negotiation which will be give and take. And it could well be that destination restriction is removed from those existing contracts by agreement with the sellers. But in return, they also want to defend the price reviews so that the price reviews aren't too aggressive, especially for the contracts that are coming toward the end of their lives in the early 2020s. But again, I think each market will be different.
Yeah, I think you raise a really important point about the gas-oil spread. And I think if you look at the term contracts which we have got in Asia, primarily priced off oil, and if you believe what was said this morning, I wasn't here at the conference, but if you believe in a $70 oil, therefore, I think it's absolutely fair to say that term oil-related LNG contract prices will be considerably above spot prices, which are going to be determined by the highest price sink market, which is going to be here in Europe. So in other words, NBP TTF. And then you add $1.20 on top of that, that's going to be your cost into Asia. So you're going to find this spread blowing out whichever way you look at it. So, but there's nothing strange with that. I used to buy oil, and you buy some of your oil on a term basis, and you pay a bit of a premium for that because you wanted reliability of supply. And then you'd pay some of it on a spot basis, and your percentage would vary on your level of risk. So that's where we're going, I think. We're having portfolio buying, and it's going to be potentially on different pricing bases.
And do you see some of this heading toward sort of a universal LNG price at some point? I mean, there's a lot of talk about breaking from the oil index prices. In Asia, there's, using Henry Hub prices, there's the spot versus term. But, an LNG Brent price, so to speak, an LNG WTI. I mean, is that something that, one, you see happening, and two, would that be necessary or a good thing for the LNG market? That's the trade.
I'll have a go. First, in the contracts, I think destination flexibility has to happen. There is no reason to keep on with restrictions. I mean, this is the old schemes, and they need to break it and blow up. So it's the traditional LNG players who don't want to change that. And I think that's a shame because this is bringing limitation in the market. And then it has an impact on price volatility. The second point is don't forget that to balance a market needs also physical assets. And you don't have much new storage capacity. You have new terminals. But overall, the storage capacity is not great. All the new terminals come in with throughput, but no storage like the Japanese and Koreans had in terms of farm tanks. And most of those new countries don't have gas storage or gas balancing mechanism with domestic supplies. So the LNG market is effectively providing the flexibility to adapt to the local demand, weather patterns, and all that. And all that is very different across the world. So again, as long as those physical tools are not there, it's very difficult to balance the market. Today it's flattened because of oversupply, more or less. But otherwise you'll have a lot of pockets of volatility coming in and out. I definitely think that an LNG price will have to emerge out of that, because today we don't have the true price of LNG. My bet has been for the past 3 years that it will have to be an FOB index in the US rather than delivered Asian index, because only through FOB pricing you get true value of LNG and the flexibility and the optionality across destinations, that you can reach any market in the world, assuming you have the vessels to do that. So that's one of my bets, but I guess in the meantime, having a little bit more liquidity on the Asian indexation for LNG is what we see today, but it's not solving the issue.
At the moment, we see spot prices which are reported by various mechanisms, Platts, EAX, various Heron, they do it all. It's interesting when you talk to players about this, they don't think they reflect the market. And I always remember one trader saying to me, we don't believe in these Asian spot prices, but when we wake up in the morning, it's the first price we look at. And I think that is a very interesting observation, whichever one it is. So I think that I agree with Frédéric. We are headed towards something. That something is going to be some sort of price. There's this huge battle emerging. Is it going to be Singapore? Is it going to be Tokyo? Is it going to be China-based, Shanghai-based? I think personally Singapore is the best location, but I think we're going to find there's some sort of virtual basis happening. But let's also be clear, there is a spot price in Asia today. It's right. Spot price is effectively MBP plus the freight differential. And then if there's spare cargoes, then that's going to be the price. If there's a shortage of cargoes, it's going to be a premium over that to whoever pays the highest price. That's the way the business works. And so I think there's a lot of talk on this, but I think a lot of it's also self-interest, that people are actually wanting to create this price in their particular location. But I have to say, I agree with Frédéric. I think an FOB price in the US has sense. There's also been an argument by some players, FOB Gladstone. You've got 3 plants there, that's a supply point. But I think Singapore makes the most sense because it is independent and it's set up an independent system at the moment.
And there is a financial market.
There's a financial market, yeah.
Right. So Cheniere started exporting out of Louisiana in February, so long-awaited U.S. exports are happening, and I believe almost all of the cargoes so far have gone to South America. Am I correct in that? Which was sort of not the original plan, but I wondered, one, whether that surprises you guys, and two, going forward, where is the market for U.S. LNG coming out of these new terminals that are either online or about to come online? Is it Europe? Is it?
Well, I've been the most outspoken, so you better go first.
Okay. Well, I think the cargoes have gone around the world. I think they've tried to put it into as many terminals as they can to prove that the U.S. molecule is moving around the world. There has been a predominance for LATAM. The netback's better there, so that makes sense. The economics, again, if you believe that you're competing against a contract price, and again, if you think that crude's going back up to 70, and if you think that US gas prices are going to stay low, and our long-term number's 350, you can make marginal economics even with a full liquefaction recovery to try and go there. But I don't think contract prices will probably stay at that level. I think you'll see continued softening of the slope, and we can talk about different pricing mechanisms going forward. So it was always designed to go 2 ways, right? It was always designed to go both ways. I think what's going to happen as it comes to Asia, and Asia is already long, the off-taker from the US is going to have to bring it to Asia and sell it at 1 cent higher than the cost of doing so, or simply pay for the liquefaction and not use it. Or, heaven forbid, not pay for the liquefaction, but maybe that's a different conversation. I think because I think that there are 2 or 3 years before we have to sanction projects, that the negotiation on price for new contracts, every idea will be put on the whiteboard and tested by buyer and seller. I'm old school. I think that people tend to be conservative because if you're a buyer negotiator and you take a new concept to the board, you've got to have a pretty high confidence that you're not taking a material risk that you don't understand. I'll give you a specific example. I think if you looked at the average procurement age and experience of the procurement leads in North Asia, you'd find that they're all 25 to 30 year experience. They've seen the cycles. If you went back to 2000 and you charted Henry Hub landed in North Asia, physically impossible, but if you could have liquefied and if you could have shipped at current prices, you would have found that Henry Hub landed in Asia was higher than Asian prices, JCC prices. It inverted in 2009 because of the shale revolution. And no one caught the shale revolution quickly enough, apart from a few indies working in the basins. So if you have that experience base, do you go and bet the ranch on a new concept in its totality as you go through in the next cycle? I don't think you do. I think you'd bet a little bit, but the primacy will be on something you know.
Addressing your point as to where US LNG will go, we are in a period of oversupply, particularly in the next 5-6 years. Frédéric's a trader, I'm not a trader. But my understanding is that trading margins are not what they used to be. In fact, they're pretty damn slim at the moment. So in that environment, I think one thing we can be sure of is that we're going to have greater optimization of shipping. And we're going to have all these ships passing in the night, which is ridiculous. It's going to stop happening. In the recent OIES book on LNG, sorry about the plug, but we've done some work on that, and we've estimated there's about $2 billion, 10 cents per MMBTU saving, which can be made readily if there's optimization taking place. So I think it is absolutely crazy for US LNG to be moving all the way through the Panama Canal, across the Pacific Ocean into Asia. It's nuts. And we as an industry are failing ourselves if we're doing that. There should be optimization. That LNG should be staying at the shorter haul markets of the Atlantic Basin, and therefore we should be finding Asian LNG should be staying in Asia, and the Middle East should be the balancer. And that is what we're starting to see already. Now, the fact you've got Nigeria LNG heading across the Mediterranean to Turkey, waving hands with the ship owner going the other way, supplying into Spain from the Middle East, is nuts. So I think we are going to see greater optimization taking place in the industry.
That's good for the traders. I guess today, REB plus liquefaction cost, if you're lucky, you get a US cargo FOB at $6 per MMBTU, whereby Europe is at $4 to $5 and Asia is at $6.50. So it just doesn't work economically. So either you take the loss and pray, or you write down, you write off some of your liquefaction costs. Which again is admission of failure. So something has to give, even if it remains that the US gas is probably one of the cheapest available in the world, but the piling up of fixed costs, which goes alongside what you are doing, has been an absurdity. And now it's payback time, I guess. And that will get somehow solved by swapping cargoes around and etc. I know you're burning to ask question whether it will go to Europe and what we will do as as a small player there. I'm not going to answer it, but I think it might not fully go to Europe. There's pull of demand in Europe, as I said, in terms of generation, if prices go low enough, and maybe that's the trend. But just one factor is helping me in this reasoning. You can still now access quite cheaply regas capacity in Europe. And normally, if there was such a wave of LNG coming and there is no other solution than Europe, you wouldn't have cheap access to regas through puts or through interruptible or whatever. And today you can find access to Europe in terms of regasification capacity, which means that even the sort of smartest traders and companies, they are not so planning for that. So all gearing up for swapping cargoes around, for hoping that the new market will accelerate enough and that some of the projects will be delayed, etc., and some form of supply management and balancing that over time. But just remember that you can still access regas capacity in Europe, whereby if you look at the projection, you shouldn't. There's 90 million tons of LNG unallocated, potentially hitting Europe. Well, first, it's not going to happen, but then you wouldn't have any regas capacity available to access. But today you do, in reasonable terms.
Okay, thanks. So the giant clock is telling me we have about 5 minutes left, so I figure there's probably some people out there with questions.
Nordin Aitlausin, member of the advisory board of EIG. This is very depressing. Yesterday, the OPEC Secretary General and the IEA told us that, well, things are bad right now, but there is a possibility of improvement down the road, because if we carry on like this, we will have a price who will have a supply crunch. Okay? Well, even this morning, we've heard the Saudi minister tell us that, well, it may not be market share anymore. It may be sometime market share, sometime, you know, supply management. So we could see a ray of hope. Now, when it comes to gas, I haven't heard once from you guys the expression of market rebalancing. When is the market going to rebalance?
No, I think we answered you, sir. We said 23, 24. I think we answered it quite clearly.
Well, what is going to cause that?
It's a simple demand.
In the oil sector, we have some indication of what can cause a turnaround. But in the gas market, what can cause that turnaround? You have all stressed the fact that demand is sluggish. It has to face the competition of coal. It has to face the competition of renewable energy in the power sector. Clearly, we can mention that. And of course, LNG is not the only commodity which is in surplus as far as gas is concerned. There is pipeline gas. And there is also some excess capacity there. For how long, I don't know. So really the question is, the title of this session is Suppress of LNG in the short to medium term. Aren't we talking about a permanent gas supply for many more than perhaps 2020 or 2022? What really, my question is, what really can cause a turnaround?
Let me be clear. I am very optimistic. I'm incredibly optimistic. I don't have the pessimism you have. We've said, and you say the oil market's going to come into balance. It only comes into balance because people have made certain assumptions on growth, okay? Exactly what we're doing here. The market has made assumptions on certain growth. We are highlighting to you potentially that may not happen because of the role of renewables, because of the role of coal. I hope, for goodness sake, we are going to come into balance, and that balance is going to be in the 2023-2024 range. But there's a lot of variables, and that's why we're being very honest with you. So I think I'm optimistic, and the reason I'm optimistic is that there are new players coming into this industry, are looking at things in different ways, and they are going to make it work. And if you fundamentally believe, which I do, that we want this environment to be cleaner and a better place, and I look at some of the photographs I see in China of the particular pollution there, and in other Southeast Asia and other Asian countries, I hope and I genuinely believe we are going to find a move towards gas. So I'm very optimistic, and I think the players are there to be able to make it work.
And I think we are extremely optimistic. So, and even this year, I mean, everybody was already starting, it's going to be dreadful. Some of my guys went short and got burned. So prices are much better than they used to be, even versus oil. So it's a matter of which one is worse, whether it's the oil market or the LNG one. But in terms of the gas demand, I think low prices are consolidating and putting more dynamics into the demand side. That's very strong. Is going to come back and rebalancing the market beyond 2020. If only the Saudis were to listen and put some LNG infrastructure rather than burning crude oil, then you have another few million ton demand. Absolutely. Like Morocco, you know, 5 million ton market potentially. So you have big tickets markets potentially coming into play, in addition to all those small ones, which start to add quite a lot. You know, just Argentina, I mean, it's 4 or 5 million ton seasonal, and all those markets are very different, but they are there. And the low prices we have been seeing and we see now are definitely moving forward things for the next decade. That's definitely. So that's optimism.
Casey Sattler with Energy Intelligence. You touched on this a bit, but I was hoping you could elaborate about this idea of when we do get to the point where we will need to see new projects, that we are likely to move toward more modular plants, more of a phasing and things like that, rather than the super large mega projects that we've seen so far. Could you just elaborate on how you see that developing and whether we'll see a mix or if we really will kind of make a meaningful shift?
Okay, I'll give you a quick soundbite because we're out of time. I think the learning that we're going through this cycle is greenfield is difficult, brownfield expansion is better, backfill is best. We're being reminded of economics, which we forgot completely as we went through the Australian build-out cycle. We didn't optimize in any way. We wasted money absolutely massively. That will be a learning. The question, how long do we keep that learning before we go back to bad behaviors? I'll stop there.
And one of the other things I think is important is if you look at the new markets, the smaller markets, if you believe that is where the growth is going to be, which I think a lot of people do, then it takes a hell of a lot of those small markets to combine together to make a large train. It complicates the project development. So it does support smaller units being developed that match the markets, which also enables smaller players to come in, and it brings that creativity I was talking about earlier on.
And even the bigger plays, innovation is coming, and that was talked yesterday and today, but look Yamal.
Yeah.
I would have bet anything that it would go wrong anytime, given the environment, etc., and the context. But it's on time. And Total and Novatec and all that have done a great job in essentially building a Lego plant outside Russia and the harsh environments of Russia and putting all that back together. And that's helping for financing those projects, I suppose.
Okay, I've got a fairly quick question by comparison. My name's Steve Kersley. I'm the CFO of an oil-field services business based in Canada, so we're obviously interested in all the noise that we hear around potential projects in Canada, off the west coast, presumably with a primary market of North Asia, which to all events seems to be oversupplied. So just interested in your views on Canadian projects for US projects.
Okay, again, I'll go very, very quickly. Pacific Northwest got the approval from the government, and then people were surprised that it didn't take immediate sanction. It's all about timing in LNG, which is fairly obvious. I suspect that the project participants there would not want to commit the capital at this time. Petronas is probably over-equitized. Shell's not really working on Shell Canada, I don't think, at the moment. Certainly Chevron isn't on Kitimat. You may see some of the smaller projects because the innovative players, to your point, keep pushing and keep pushing hard. I think there is an advantage to Canada going into Asia because it's looked at as US political light. And I'll probably get sacked for saying that. But the idea is if you export from the US, there is that very unlikely presidential veto risk that's not in place in Canada. So there is an inherent wish to buy from Canada, but thus far the pieces of the various projects haven't come together.
I think that there is the argument some people put forward that Western Canada projects have missed the boat. I think Western Canada has overcomplicated it. Not only is it not given the necessary regulatory approvals from government, but then when you've done that, you've got all the First Nation approvals that have got to be reached. Offers have been made, and it's been complicated considerably. That's delayed it. And as you said, it's a matter of timing. It is a matter of timing. And if FID had been taken 2 years ago, which could really have happened, then that project will be under construction now, and there would be a project. I think there is the argument that says, some of these companies, and you mentioned Petronas, have invested a lot of money, therefore it's going to go ahead. Yeah, but there are the arguments that it's sunk cost as well, and therefore am I going to put more money in? So I don't know. All the economics and the market directions say that it's very difficult to take a final investment decision until 2020. But I know inherently, having worked in this business for 20 years, LNG is very political, and you never know, there might be some political decision made. But just a comment.
As we were saying in the green room, we could probably talk about this topic for hours, but I want to thank the panel very much for a lively discussion.
Thank you very much, Mark, Frédéric, and the two Davids. A very enriching panel on which to end, but we are not quite over. To wrap things up, I'd like to invite Herman Fransen, who is the conference chairman, to come up here to deliver some brief closing remarks.
I just wanted to very quickly thank all the great sponsors who have made this conference possible. And without them, we just couldn't do any more conferences. So thank you very much for the sponsorships. I would also like to thank all of my colleagues from EIG as well as from the International New York Times for the great work they have done. The preparation of a conference like this takes almost a year from its inception. I can't mention all of them, the moderators of our group. I want to thank, of course, the speakers, everybody who has made this conference possible. But from our own organizations, I want to particularly single out Liz Hyde, who is our Director of Conferences, who has really done a yeoman's job through the very last minute to make all the changes possible. And Christine Kennedy, also from our London group, who has in particular worked very hard on the dinner last night, but also on many of the other parts of making this possible. And from the International Herald Tribune, Brenda Haggerty, who has been working longer than anybody else from the marketing side on this conference many years ago. And of course, then otherwise, all my colleagues from EIG. And in particular, I also want to thank Peter Kemp, because Peter has done a marvelous job as the Master of Ceremonies, made it work like a Swiss clock on time, and we are very grateful for that. So the only thing now left for me is to tell you that next year the conference will again be in October, 17th and 18th of October, and well, we will be notified, and we hope that most of you will come back next year for the 38th annual conference and the 21st Petroleum Executive of the Year dinner. Thank you very much, and hopefully until next year.